In this video, we're going to take a look at a live trade based on the E-mini S&P Japanese yen spread setup. The chart at the top is actually a spread chart taking the E-mini S&P and subtracting the Japanese yen. The chart in the middle is the E-mini S&P futures contract, and the chart at the bottom is the Japanese yen futures contract. Now we have edited this video. The trade actually took place over a 15-minute period, but we made some edits to keep this video shorter to make it easier to watch and understand what's going on and taking place. We have also made some adjustments to our chart based on the rules discussed in the article. When an uptrend is present based on MACD rules, we have green bars. If a downtrend is present based on MACD rules, we have red bars. If RSI is greater than 70, we have green triangles. If RSI is less than 30, we have red triangles. And we see here with the top chart that we have an uptrend based on the rules discussed in the article. So we went long the E-mini S&P and we went short the Japanese yen simultaneously. Now, in the article, we talked about using a $200 stop loss either on the total position itself or $100 of risk in each individual market. And that's what we started with here, with a $100 stop loss or 8-tick stop loss in the E-mini S&P and a $100 8-tick stop loss in the Japanese yen. Now you might have noticed that I adjusted the stop loss in the Japanese yen, and this was because we actually started to see a nice move lower and we were up 4 ticks on the trade. So this is where using individual stop losses we could manage the risk in each individual market, take some risk off of the table if the market starts to move in our favor. So that's what we did in the Japanese yen. Instead of having $100 of risk at this point in time, we locked in 4 ticks, and now we have a $50 stop loss in the yen. Since the E-mini S&P hasn't really moved, we're going to go ahead and keep our stop at 8 ticks, hoping that things start to move in our favor. We see now that the E-mini S&P trade are at about break even there, and the Japanese yen were up $75. So we could start to lock in some profit on the Japanese yen side. We went ahead and adjusted our stop loss to 2 ticks, plus 2 ticks. Down a little bit in the E-mini S&P, but the profit in the Japanese yen is offsetting the small loss in the ES. Now, this is where in the recording here, it's a very quick trade, but we were in this trade for 15 minutes. We were also hitting the 11:30 Eastern cutoff. And at 11:30, that's when I like to either take risks off the table or close trades for a small profit if possible. We find that ideally the best window for this opportunity or setup is 9:30 to 11:30 a.m. Eastern time, and that's why I adjusted the order in the E-mini S&P to go ahead and take a 1-tick loss on that trade. We're still up in the Japanese yen, and I'm still in the Japanese yen leg of this trade. I was looking to see if maybe we could just trail this move if the market did move lower and just locking in profit along the way. At this point in time, you see that we're making $50 on the yen, we're down $12.50 in the ES, and now we're out of the trade in the Japanese yen for $37.50 profit. So this was an example of when things don't quite go as expected. We didn't really get a strong trend. We hit our time cutoff and we closed the trade for a $25 profit.